Money. We all use it every day. It shapes our lives, fuels our dreams, yet most of us take its very existence for granted. But do you know how it truly started? What's the fascinating, epic story behind the coins, notes, and digital numbers we trust so much? The journey from ancient barter to modern currency is not just a tale of finance. It's a profound lesson in human innovation. And if you're looking to enhance your English listening and comprehension skills, the rich vocabulary and clear narration of this story will be an invaluable resource. Hello and welcome to the deep dive you didn't know you needed. Money wasn't always coins, colorful bills, or glowing digital numbers. In fact, for most of human civilization, it looked nothing like what we recognize today. The story of money is the story of human civilization itself. A grand journey shaped by survival, innovation, the rise and fall of empires, and the unwavering need for trust. It stretches from simple fireside trades to the complex global financial systems that govern our modern world. What began as simple barter slowly grew into something far more powerful. As tribes became villages, and villages became cities, people realized that trade wasn't just about survival. It was about growth, opportunity, and connection, prompting the very definition of value to evolve. Picture that small village thousands of years ago. Life was a constant negotiation for survival, with people depending on each other, sharing and exchanging fish for grain, wheat for tools, or goats for cloth. Barter worked beautifully when needs aligned, but it failed completely when they didn't. As when a fisherman with a heavy catch couldn't trade because the local farmer already had enough fish, creating a reliance on perfect matches that were simply too rare. Humanity realized that survival shouldn't depend on coincidence, sparking the crucial questions. How do we trade fairly when our needs don't match? And how do we store value in a way that lasts beyond the moment? To solve this inherent limitation, early cultures across the globe began choosing objects that everyone universally agreed held worth, experimenting with various forms of primitive money, including beautiful shells pulled from distant shores, polished stones carved with effort, animal hides prized for warmth, blocks of precious salt that preserved food, and even cattle, which served as living stores of wealth. These items became powerful symbols of worth, allowing people to store value and trade more efficiently. Yet they all had flaws. Shells cracked, salt melted, beads could be forged, and cattle wandered off, proving that value could disappear just as easily as it was created. This unending search for dependability finally led to metal. Durable, shiny, and universally coveted as copper, bronze, silver, and gold caught the eye and changed the rhythm of trade forever, allowing wealth to be measured by weight for the first time. Yet it was still cumbersome, as merchants had to lug heavy ingots and painstakingly weigh and test purity in every slow transaction. This inconvenience prompted the dream of a standardized token, which was realized around 600 BCE in the Kingdom of Lydia, when metal was melted, shaped into discs, and stamped with a royal seal, thus birthing the world's first coins, making value declared, trusted, and backed by authority rather than constant measurement, quickly fueling trade, armies, and empires across Greece, Persia, China, and India. However, carrying bulk coins was heavy, and metal supplies were limited, forcing civilization to ask again, how could money become lighter, more portable, yet still trusted? The answer emerged in ancient China, where merchants facing booming trade and heavy coin burdens developed paper notes representing stored metal, a lightweight, portable, and efficient solution quickly adopted by governments that transformed commerce but carried a hidden danger. The ease of printing too much paper money quickly led to inflation, causing prices to rise and value to shrink. Yet despite these risks, paper money spread across continents, transforming money from a mere object into an idea, a promise, and a symbol of trust. As trade expanded further, so did the need for safe storage and management, leading to the evolution of banks. From simple vaults to sophisticated institutions, as exemplified by the Medici family in Renaissance Italy, who pioneered double-entry bookkeeping and letters of credit, allowing merchants to travel safely without carrying gold, establishing money as trust, reputation, and written promise, which fundamentally laid the foundation for governments to control currency itself. By the 1800s, nations sought greater stability and introduced the gold standard, tying paper notes to a fixed amount of gold, which encouraged predictability in trade, but its rigidity became a limit as growing populations, industries, and wars demanded far more money than gold reserves could support, making crises impossible to manage. After 2 world wars and shattered economies, the United States formally ended the gold standard in 1971, ushering in the age of fiat currency, money backed not by metal but solely by government authority and public trust. A shift that granted governments immense power to steer economies, but also carried the monumental risk of hyperinflation, as seen in Zimbabwe, Argentina, and Germany's Weimar Republic, forcing nations to respond by building complex systems of central banks, regulations, and policies to stabilize this powerful yet volatile form of money. As computers advanced, money detached further from paper, with transfers becoming instant, credit cards replacing cash, and the rise of digital wallets like Apple Pay, Google Pay, and PayPal, making money increasingly invisible, allowing people to transact seamlessly without physical payment. This technological surge inevitably led to a radical challenge. What if money didn't need a government or bank at all? In 2008, amidst a global financial crisis, Satoshi Nakamoto released Bitcoin, a cryptocurrency secured by a public ledger called the blockchain. No bank, no government, no physical form, which instantly exploded into a global phenomenon, allowing anyone with a computer to store and transfer value freely, yet simultaneously introducing volatility, scams, and regulatory battles where the ideals of freedom clashed with the need for stability. Today, governments are responding by exploring central bank digital currencies, also known as CBDCs, digital versions of national money, suggesting that cash may soon disappear entirely, making the future thrilling but potentially dangerous, as artificial intelligence could eventually control financial systems, CBDCs could track every purchase and potentially limit transactions, and the biggest question looms: what happens if a cyber attack, a major blackout, or digital manipulation compromises a world entirely reliant on invisible money? And so, the story of money continues, from shells and stones to golden coins to paper notes, banks, and today's digital currency. Money is more than a tool. It is trust, power, and the reflection of our civilization. As we look to the future, the question is no longer history, but choice. In a world where money can change shape and meaning so rapidly, what would you hold on to? If you were standing in an ancient marketplace, would you trust the glint of a coin more than a sack of grain? And looking toward the future, where money might vanish from our pockets entirely, what would you trust to hold your wealth and your freedom? Thank you for joining me on this incredible journey through history. And if you enjoyed uncovering these fascinating, interesting lessons, please don't forget to hit the subscribe button for more stories. And let me know your thoughts and opinions in the comments below. Your engagement helps this channel grow and explore more hidden histories.